One of the things that's become really apparent over the past year is that gold and metals are starting to move because there's been a distrust with paper currency that's continuing. This is a theme that's been playing out really since 2008 and 2009, and we're now starting to see it intensify. It's starting to have an impact not just on certain segments and certain investments, but it's very, very widespread. And over the next few minutes, I'm going to explain to you why everything is rising and how that's going to impact residential real estate here in Australia. So what I've put up here is the price of gold. Many of you will be aware that gold has been rising. And I just want to spend a few minutes to highlight where we are and where we've come from and perhaps where we're going. Gold has always been seen as a currency commodity. And this is very, very important to distinguish because there are two types of commodities in the market. There are industrial commodities that are used in production, and they're things like iron ore, which is used in steel making, coal, which is used in steel making, and electricity. We have oil, we have copper. They're the types of industrial commodities. But gold, while it is used in industry, it is seen more as a currency. It is seen as a counter currency to the US dollar. And gold had been asleep for a few years. I mean, it had risen. If we have a look at the returns, the 10-year returns, it has been rising and it has been growing relative to the US dollar. But it's only since 2024 and 2025 that it started to take off. As you can see on screen, you can start to see the levels that are here around gold. And year to date, so far in the first couple of weeks that we've had in 2016, it's up 8%. Over the past year, it's up almost 72%. And over the past 5 years, it's up 150%. So we can see that gold is starting to move. And as it moves, it's pulling up other currency commodities like silver. So if we have a look at silver, for example, let's just put it up here. And you can see silver started to take off over the past year or so. It's up more than gold. It's up 200% over the past 5 years, 272%. Silver is an in-between metal. It's a metal that is used as a currency, but it's also used in industry. And that's why silver's been really, really hot, because it's sort of in the middle, whereas gold isn't really used that much in industry. Silver's application, particularly as we electrify and the world changes and we move to EV vehicles and all that kind of stuff, silver's really, really hot at the moment. But silver also has a lot of volatility. So it moves up faster, but it can also move down faster. The point here is that gold and silver's moves are very important as a property investor, because when we look at property, we're pricing that property in dollars. So when we look at an average house, for example, in Sydney, and we say the median house price is now $2.6 million or $1.6 million, let's say $2 million, right, for your median. If we have a look at that, we are pricing that in Australian dollars. So we're swapping Australian dollars for that house or that piece of real estate. And we shouldn't just look at the price of the real estate. We need to also look at the price of the dollar. And some of you, this concept might be new to you. You might be thinking and saying, how do I know what a dollar's worth? A dollar's a dollar. Well, it isn't, because if we have a look at silver and we have a look at gold previously, we can start to see that gold and silver are starting to rise. And that 1 ounce of gold is no different today than it was 10 years ago. What's different is the value of the currency, right? So this is Australian dollar gold, and my price levels here might not have that much backfill. Let me find another instrument. There we go. So as we can see, this is what's happening to the Australian dollar if we look at gold. So the point here is that that house that we're pricing and we're saying $1.5 or $2 million or $2.5 million or whatever it is, that house hasn't really changed. It's the dollars that have changed. You now need double the dollars to buy that house. And this is a very important concept that will drive real estate markets more and more over the next 5 years. We're starting to see a shift away from currencies, from fiat currencies, and that happened over the past 5 years or so with crypto, but it's now starting to happen in metals, and it's going to also happen in real estate. You're going to have more and more investors moving into real estate and real estate assets as silver becomes more expensive, gold becomes more expensive as crypto markets run, real estate markets become in play more and more. And the reason why we like real estate, and the reason why I like real estate relative to gold, for example, is because real estate gives us an actual return. Real estate gives us a yield. It gives us rent. And because we have that income stream, we can then go out and use leverage and borrow, because those funds that are coming from rent can go towards debt servicing. And in a market like Australia, we have an additional benefit, and that is that the government actually gives us a tax advantage if we're out of pocket in this exercise. And that's why we like residential real estate. I'm now going to talk a little bit about Australia and why I think Australia is a great market to be buying real estate. So why Australia? Well, first of all, Australia is in one of the top 10 countries that are attracting wealthy migrants from around the world. According to Knight Frank, last year it was in the top 10, it was number 10, and that'll continue to grow. This migration of wealth into Australia will continue to grow. It has a stable economy. We can see the Australian stock market over the past 10 years has tend to perform quite well. It's up significantly. If we have a look at 2016 levels, we're sitting at about 5,000 for the ASX 200 index. It's now just shy of 9,000. And so the corporate health of Australia is still very strong. The stock market's strong. It hasn't grown as much as the US market, for example, but it still has grown significantly well and managed to weather the storm, which was the pandemic. The fiscal situation in Australia is quite strong. And there's going to be a big driver in Australia over the next few years, which is the commodities that I just spoke about. When gold and silver rise, they push up the price of other commodities. And when these commodities rise, what happens in Australia is that export value grows. So the terms of trade of Australia trading with the world, as these exports, as a ton of ore goes up in value, there are more tax receipts, there are more royalty receipts, and there is more demand for Australian dollars to buy these commodities. And so when traders are buying these commodities, they're exchanging currency for Australian dollars, and that puts Australian dollars in demand. That's all very, very positive. What I'll do is I'll show you how much copper has moved and a few other commodities and how that places the Australian economy over the next few years. Okay, so here's copper. And as you can see, the copper price has moved higher. It's now sitting just under $6 a pound. And there's been a lot of fluctuation in copper prices, but they have moved up from about that mid $3.50 range, $3.50 to now just shy of $6. And there's potential to break out and keep going if copper continues to follow what's happened in silver and what's happened in gold. The point here is that Australian commodities are very well placed. The Australian dollar is quite cheap. The Australian dollar can continue to move higher. Australia becomes more attractive. And this is all happening while the value of currency continues to come down, while investors are looking for more and more gold and silver and Bitcoin and rarity type of exposures. And Australian real estate stands out because it has those qualities, those characteristics. It has the tax advantages, and it's in a country that's doing well. And it's in a country that's doing well because the commodities of that country are in demand. I'm going to finally show you the Australian dollar and show you the Australian dollar so far over the past decade and the prospects for the Australian dollar upside. If we have a look at the Aussie dollar over the past 10 years, it hasn't really moved much. It's kind of negative 2 to 3%. Over the past 5 years, it's down 13%. So even though the Australian real estate market feels like it's expensive, it's always important to price it in US dollars. So that $2 million house in Sydney, for example, if we really want to compare with other markets around the world, then we need to price that in US dollars because the US dollar gives us that base in which we can compare markets all around the world. if we say Australia is a top 10 market where global wealth is migrating to, then we really want to compare Australia in US dollars with the rest of the world. And because the Aussie dollar hasn't really moved much, because over the past 5 years, the Aussie dollar is down about 13%, that means that Australian real estate, even though it has grown, the Aussie dollar drag has been somewhat limiting the gains in US dollar terms. That $2 million house is actually only worth 1.3 in US dollar terms, right? So if the Australian dollar starts to rise, there's going to be more flows into Australia. There's going to be more capital coming into Australia. There's going to be more momentum behind Australian assets. And that's probably the fourth layer around why we're positive around Australian real estate and particularly Australian residential real estate. Now, that doesn't mean that any real estate is going to be attractive. That doesn't mean you can buy anything. You're still going to be very, very careful in terms of product selection, in terms of markets, in terms of exposure, in terms of having a strategy and gearing and doing all the important things that still come with property investing. But we need to always remind ourselves that we're investing in a market that's very attractive. We're investing in a market that's still quite cheap, given where the Australian dollar is relative to the US dollar. And we're investing in a market which perhaps over the next decade or so, as AI starts to grow and as electrification, EV vehicles, solar power, all the electrification in the world forces producers to look for commodities, and in markets where commodities are strong, we're on the top of that list in terms of being one of the most attractive markets. Go Australia. We think 2026 is a great platform to be investing around. Be cautious around buying the right thing or having the right exposures, but be confident also in that commodities are moving in the direction that's going to push Australia's economy higher and higher, support its currency and support its assets.